Alright, it's that time again. Let's take a look at the market, starting as always with silver. This is the hourly, but let's look at the daily. Last week I was talking about how frustrating it was. Well, this week was much the same. Rangy, choppy. It's a little worrying. Once again here, just on this last day on Friday, this big spike up. I saw a few silver bugs, a few silver bulls, macro bulls, putting their head above the parapets and a little more cautiously than a couple of weeks ago and earlier in May, but nonetheless putting their head above the parapet and saying, "This is it. Here we go." And yeah, no such thing, no such look. You can see kind of the key pivot we've got in here now. So let's thicken this up. What's there to say? What's there to say? I mean, this run up that I missed completely from the end of March at $24 was very nice for whoever was in that. But I've been trying to get in basically throughout the whole of this chop period, and I've just been repeatedly stopped out. I got in here, got stopped out here, got in here, got stopped out here. It's just getting ridiculous. I'm in again. My position is slightly green. I'm in from under this black line. Well, once again in MT4, I'm in from somewhere down here, like 2770, something like that. Yeah, what a pain. What a pain. Let's have a look at the weekly. We're still holding the red support. We're still holding the big 50% fib. We're still holding the weekly breakout. But you can see we've had, after this thrust candle at the start of May, we've had 1, 2, 3, 4, 5 candles going almost really nowhere. I mean, look at the opens and the closes. I mean, they're dojis of different kinds, or small candles of different kinds. They're like an inverted hammer. It has a small body to it, but the whole candle is small. It didn't wick us around like the other ones, but it's still super small. And I don't know really what is there to say. Let's have a look at the weekly on our chart with our other indicators on. So I still maintain that I think the macro people are probably right. I think there's still a huge case to be made for us being at $40, $50 by the end of the year, or autumn kind of time frame, probably more late autumn than anything. And I did say last week I think that I wouldn't be surprised if they screwed us around for the rest of June. Because we are now, I'm recording this on the 12th, so we are approaching sort of the midpoint of the month, and there's that the time is running out on that particular clock of my prediction. But I think this is just something that is having to be endured. There's no reason to be pessimistic here, especially. So I'm going to be keeping the long distance I have, and certainly if we come back under this red level, below this wick here would be an interesting place to buy. In this area of dojis here, at the 25.88, 26 level would be an interesting place to put in some buy tickets. Hopefully we're not going to do like a full test down into 23, or even back down into 17 or something like that. But again, we've held above for a number of weeks consistently above this breakout level. You could sort of make up the case if we're getting a negative divergence on some of these indicators, but as long as we hold above certain key levels, that's my line in the sand, if you like. and I'm sticking to it. Let's look at the daily. So yeah, you can see it quite clearly here. So we just took out this wick high here, so strong rejection, but we maintained above this support, we maintained above this support. But it doesn't look good. That's not a good looking candle, but the compaction of price action, it's nothing to unduly worry about, I don't think. The first couple of trading days of the week will be revealing, unless this is, again, you can play around, you can put in your negative divergences, you can say, well, this is the bear reversal zone on this RSI. It's wait and see. It's wait and see. It's range and it's chopping, and you can't get bored of waiting. And it's impatience that does most of the damage in trading. You think I'd have learned that by now, in practice, rather than just in theory in my head. But it is impatience that does the most damage. So there's no reason for me to sort of abandon ship yet and despair. Let's go down to the 4 hour. So on the 4 hour, I'm trying to place myself in terms of dates now and previous price action. But the main thing is basically these white diagonal channel lines that and the purple lines that I've replaced. This was the old daily channel here, the 0%, and like the 100% were the old yellow daily channels from previous videos. I've extended them downwards. It's like a negative channel version, a minus percentage channel. And we're ranging. We're going horizontally, you can see very clearly, support, resistance. But we're doing a sort of a back test of this black horizontal level and this sort of mid-white channels just running through this price action from March all the way through to the present. I won't see this as support, I want to see reverse, I want to see kabloom, I want to see big time breakout, but maybe, look, because this must be an extremely optimistic price target from some other occasion. Look where I thought we would be. How naive of me. Yeah, and here is my pessimist scenario, I suppose. So at least I put both of them in. I wasn't being completely stupid. Yeah, so I'm watching again the black and the red like a hawk. I could just about handle a trip down into this purple box. Absolute worst case scenario, retest the 50 at 26.75, maybe take out this wick, but certainly anything under the 50, I would start to get dubious under the red, under this fib. You can see this would be another back test of the weekly breakout. We start going under these, it's going to look very bad indeed. So, buying for the time being, but aware that the clock is ticking and somebody's got to take control of this. Even silver, which is an asset that will chop around for fucking ever, somebody's going to take control of this situation. I still think on the whole there's more of a case for it to go up than not, in my very humble opinion. Let's look at the 15-minute while we're here. So I suppose this is our black horizontal level. There's our red weekly support. And there is our big orange 50% fib, and the mint choc chip weekly triangle breakout that we had. I mean, look at this. This stopped me out the other day. When was that? Thursday. Yeah. I mean, these lows down here, you can see how tasty they would be in terms of plunging into there to scoop up some orders, but by then my stops were, after this move up, I think my stops were very conservatively placed actually. I think I was somewhere around here, like 27.60. So I think I was very relieved to see him. I just got missed here. They took me here. You know, oof. I thought that placed my stops nice and deep. I didn't see this until it was too late. Until after the fact, we can see why they went there. I mean, look. These lows. Very rapid up move. Channeling, diagonaling, wedging. And then just, I mean, look at the state of this. Look at the state of it. You can make a sort of case for it being a double bottom in RSI here, slightly lower low on close. At supports, at whatever this is. Oh, that's nothing. Ignore that. And in this sort of, I'll extend this area here. But you get these moves up that gets everyone very excited. Get your hopes up. Mine too. I mean, who wouldn't when you see something like this? But then you say, well, you know, it's going to back test. Maybe this pivot here. Yep, up we go. Oh no, we're back. We're going up, hooray. Oh no, oh no, oh no. Then we test it from the underside, this pivot level here, and then we sort of dump out a bit more. So, but again, we've got the potential of a double bottom in RSI. We're at support. Monday will be interesting. Monday will have to be pretty bloody interesting, in fairness, from a bull perspective. Otherwise, I think we're revisiting much lower, at least back into 27, 50, 60, probably back to the red weekly, and you know, why not lower? If this area's been cleared out by this spike, then you're looking further back, you're looking at the points of origin of this move, you're looking at sort of 27, 30, 40 level again for the next area that might see some buying action or shorts closing, buying back, that type of thing. Outside of OBV, again, we're just on the 50 level. We're perched on that decision points area where, you know, are we gonna who's going to take control? Who's going to take control? Very small positive divergence on the Eastern movement histogram, and again, the RSI. This time of price volume trend. Of dubious value, I think, on such low time frames. Let's really go down. Let's make everything even more dubious and look at the 15. Yeah, what a clusterfuck. But it's the ease of movement indicator here with the positive divergence, the bullish divergence. Right, so that's my summary on silver. Getting more frustrating by the week. Oh, what fun it is to trade an asset like silver. But of course, I know the moments I give up and go and do something else, it'll finally fulfill, you know, its destiny and go to the fucking moon. Right, euro again, another anti-dollar asset. Bad week for the euro, but silver showing at least silver showing relative strength, I suppose, compared to the euro, at least in the short term. Again, there's the move up starting in April this time, late March, April. Wedge, breakdown, back test. Chop. Just took out this little wick. We're coming into the point of origin of this move here. Again, we could take out this little wick here. Boop. Then we're into the point of origin of this move here, and some sort of diagonal support from the weekly. Let's see where that comes from. Yep, there we go. I can zoom out a bit more. No, it's not less than me. I've got 200 units worth. Let's try 10k units worth. Yeah, too much. I think I wanted 1,000 units, but there you can see it's possible we come down and do another test on this long-term diagonal channel line that I've got in here. Of course, if the euro is going to do that, one can only imagine that silver is also going to have to go down as another anti-dollar asset. Let's go to 1,000 units. For all anti-dollar assets must move at least somewhat alike. And the dollar will do the inverse, obviously. 4 hour. You could make the case that we're seeing bullish divergence, but you could also say that this is just the most ridiculous and absurd negative reversal into a bear reversal zone, and we've dumped the fuck out, and this is, should probably be ignored. You could make that case. If we start getting a close over this level, that'd be a great start. If we regain this as support, that'd be a fantastic start. Regain this big 50% fib, get over that, and then I would, if I was in trading euro, I would be buying away quite happily. Otherwise, I think 12,000 would be a reasonable call, a reasonable shout on that, a reasonable estimate. And I don't see anything that you would trade any other way, whether bullish or bearish on that, at least in the near term. Long term, again, people far more capable traders than I, with a far better understanding of these things. I think that the euro is still, if we pull out the quarterly, will it let me? No. Of course I can't go back any further, can I? But they still think essentially this was a back test and we're going to go up to 1.4, 14,000 pips, whatever on here. And I'm not going to disagree, so this is a basis for me still, again, bullish bias on silver, bullish bias on anti-dollar assets. That looks like a back test to me, on the quarterly anyway. On the weekly, you can see a bit more clearly here, but this is a little rounding top here. Look at these spike rejections, these wicks, it's wicking, it's trying to get above, and then we've closed below. So again, this fib and this horizontal resistance now look very important. Let's get into the daily. Yeah. That's sort of 12, 150, 60, 12, 140 area. Get into the hourly. Can we see them? 12, 1. Yeah. That's a shorter term, that's a longer term. There's the fib. So, it's possible that we go up like a rocket here. It's possible we, again, frustrate, annoy, irritate the people who got stopped out here, and then we immediately go back above these key levels from the longer term, and that would really, really piss a whole lot of people off, and therefore you've got to say there's a decent likelihood for it. Let's look at the S&P. Let's go all the way up to the weekly. Yeah, look at this. New all-time highs. New all-time highs. It whipped straight into the my dual. I love my dual 14 periods moving averages. I find they serve. If you're going to have moving averages, just to help place price visually, above and below, as well as coming into horizontal levels, it gives you that sort of dynamic area. As well as your supply to demand, your support resistance, it does give you that dynamic support or resistance that you can look at and think about your bias, but look at it. I mean, you can say negative divergence till the cows come home, but I mean, who's going to argue with the ease of movement since, when was this? The 11th of May of last year on the weekly has only had 2 weeks. 2 weeks below zero. This is not something you fight. I used to think, well, look at this. You got the bearish divergence. It's the price is so high, all this kind of thing, but you don't fight it. That's the wrong thing to do. I learned belatedly as of about November of last year. 4 hour. Again, look at this. This is something I drew in, and look how it backtested. That's again simple stuff. Just keep it simple. I've got to keep it simple. I don't know if my charts look simple from all the lines and mess on them, but it really, my approach is so simple compared to how I used to think. Anyone who's seen the videos of the nonsense Forex guy, I briefly thought that was the way forward. Just have a whole tick sheet of criteria that an asset must meet, it's got to be above this moving average on such and such a high volume, and you've got to have a MACD cross, and you've got to be at this level on the RSI, and then you do, and it's, you know, calling it an algorithm's a little bit cheeky. I suppose technically it is, but when people think of algorithms, they think of, you know, supercomputers plugged into fibre optic cables, and, you know, robots and artificial intelligence, and so I don't really like he calls it an algorithm, even though technically I suppose it is. It's a rule set, it's a criteria for entry. And I thought, more, you know, if I have 5 indicators and I wait for a crossover on all of them, and I wait for a moving average crossover, and I wait for price to cross over the moving average on this time frame, then on this time frame, then on that time frame, then, you know, this will give me more certainty and more confirmation, and it's complete bollocks. You need to keep it simple. That's what I found anyway. Not that I'm a successful trader, but I'm failing less than I used to, and I see things play out in my analysis at least. You know, my analysis is fine enough. It's my execution and things that have been the trouble. Over-eagerness to get rich. What a sucker. So yeah, this is the 30-minute view. It's not a good position to buy. We're near highs. If you're going to do anything, I suppose you might sell. Because we're near highs, and that would make sense. Yeah. Nothing really to say other than it looks strong. Tech 100, Nasdaq, similar story, looking fantastic. Again, I spotted the positive, the bullish divergence here at these lows. We came back into the point of origin of this move 1, 2, 3 times. That would have been a great place to buy, but alas, what have I been doing? Yeah, I've been murdering myself in silver, getting chopped the fuck out. And again, look at this. It's just ridiculous. It's just ridiculous. Why aren't I trading this? Anyway, GBP USD, another anti-dollar asset. Is it going to give us any clues? No. Look, it's been doing much the same as silver. What a disaster. I feel terribly sorry for anyone who's been trading the pound, unless they psychically knew at this point it was going to enter a range and began range trading it. Good for you if that's what you did. Let's look at the 2-hour. We're in a similar position to the euro, where we finished the day, finished the week near these range lows. At this again, there's our key. There's our big 50% fib. This time, where's that from? From the monthly. Similar to the euro. We were very near that 50% fib. Yeah, potential bullish reversal zone. If guns ahead, I'd be going long here, just because we're at support. And on the lower time frames, there were some signs of strength. And again, as long as we can stay above these levels, 1, 2, that'd be pretty tempting. It would be pretty tempting. Here's the FTSE, looking good. It's not often you can say this about the FTSE. Here was its range of hell, extreme high, extreme low, but at least the movement was kind of, you can see, it's got that upward sloping vibe to it. This is potentially a breakout. But we're coming into the extreme high, and we've just come into this monthly fib. Monthly 23.6. Yeah, it's a diagonal. That's from a fib channel. Cutting through this distribution. Capping. Touched as a pivot. Nothing too much here, but it did serve as a pivot on the low of this candle. Wicked, cut through, wicked, and then served once as resistance. Now we're approaching it again. Will it serve twice? Will it serve 3 times? Presumably each time it gets a little bit more exhausted. So, again, the FTSE is looking amazing the whole time. It was putting in this positive reversal. I mean, look at this. What is this on the ease of movement? Christmas. Yeah. I would feel zero temptation to short this. On the daily. Let's have a look on the lower time frames, because it is approaching highs. Similarly to the S&P, you've got like a little divergence on RSI. This was a box that capped things on the way up, so you'd want to see a little flipperoo. You'd want to see this become support maybe. Look at that backtest. I think we looked at that last week. Bonds. Oh, bonds. How right have I been about this? How right have I been? We've even broken out the channel and kind of backtested it. And we're above these yellow horizontal levels, and I mean, what is there to say? We've broken out of this flag on the RSI of unbalanced volume, but again, now it's looking like it could be putting in a negative divergence, bearish divergence, but who's to really say? Look at this double bottom here. You know, green. This pullback, ease of movement stayed all green. Positive reversal. I call for a big move here. We've had a big move. And if this represents crashing rates, you know, where was the benefit in silver? Yeah, nil, zero, nada, nothing. So that's frustrating. Word of the week, I think, this week. Frustrating. It was word of the week last week. It's doubly the word of the week this week. Maybe bonds will cool off a little bit here. I don't know. Maybe we backtest this fib channel line here with support, rising support. Currently it's at 11,557. Or maybe this negative divergence will cause us to come back down all the way to this level, these levels here, these horizontal levels at 11,400. If then statements. The dollar. It's been the dollar that's been moving things. It's not been bonds, and it's getting hard not to think. It looks a little bit good. It looks a little bit healthy, and not in the kind of way that you would ever want. We broke out from this wedge, spike up, spike down, back into the point of origin, spike up, spike down, doji, candle up. What is there to say, really? As long as we hold above $90.15, the dollar is looking good, which is bad for me, which is bad for silver, which is bad for anti-dollar assets of every kind. Here's the Nikkei on the 4 hour. This was the level I said if we go above here, it's buy time. We came up, we came down. Last week we come up again, and then we spent a week doing not much of anything. Yeah, not much of anything. Super zoom. You can super zoom in on the not much of anything happening. You had a buy signal here in the positive reversal. So everything from this candle here was a buy, going down as long as we held the close here on a closing basis. Yeah, not a whole lot to say. We're in the middle of this range. This was the range high, this is the range low-ish. We're at the midpoint of the range. I mean, there's not a tremendous amount you can say about that. Really. Shall we do crude oil? I mean, look at this move. I actually remember talking to my parents back when this is the continuous contract. $7.70 because the futures for the next month or whatever went negative back in April 2020, a bit more than a year ago. And I remember telling my parents, look, the price of oil has actually gone negative. You should buy oil. You should take, you know, if you've got any spare money in your retirement, your pension, you should buy some oil. But again, why would they listen to me? I've got no money, really. I've got no trading or investing track record. But it was just so obvious. Even to a fuck up like me, it was so screamingly obvious. And I told them, you know, they didn't fucking listen, did they, of course. But just imagine if my parents were just the kind of suckers that, well, I could ring them up and go, I've got a hunch, I'm starting my own trading business, and some sort of BS. but you read stories where people, say like, oh, I got, my parents to invest 5,000. I convinced them to invest £5,000 in $5,000 in Bitcoin. And you go, well, that will never work for me. But we should have gotten into oil, obviously. But never mind. What's oil doing now? It's high. It's looking good. Is the Great Reset going to kill oil? Oof, above this pivot looks good. Will we backtest this pivot though? Maybe by start July we'll need to give that a backtest. Yeah, but 78 or 80 would make sense as the next upside level. Bitcoin, again, we've been staying under this line, and this line. Every time we've got above or come close to a touch, we've sold off. I've been taking paper trades on this, just on paper, fake, imaginary, and it's been all about shorting at these kind of levels, and it's worked out every time. So in my imaginary Bitcoin trading, just like my imaginary Nikkei trading, in my imaginary bonds trading, I'm doing really well. All these trades I'm sort of taking on paper are working out really, really well. And my real trades in silver are doing shit. You've got to laugh. You've got to laugh though, haven't you? You've got to laugh. What is going on? Where's my box? There we go. Yeah, you've got to laugh. But ultimately, as long as we're below, especially the yellow, at a last resort, as an absolute last resort, maybe the blue. I wouldn't be biased towards further imaginary shorting, further paper short trades on Bitcoin. Look at the hourly. Yeah. Is that it? No. Where's the big? There it is. There's the big yellow one. There's the orange. Look how we distributed exactly above it. Look how we capped. Look how we capped. Wonderful how it cut right through here again and again and again. And this is, again, that's just a duplicate line that I've artistically placed from weekly levels, and look how it's playing out. This blue line's not so good. I'm not sure that's too relevant, but whenever we come near this yellow line, we've seen a decent reaction, or just above. I think between this area here, or even maybe from right away, from now, but I think this area between the black line and the blue line would be a good sell again, as we, this bottom might become a top on the hourly. Probably delete these things on the 30-minute. They probably served their purpose. Yeah, but it's sluggish action for the time being, but yeah, by its short. Anything else worth talking about? I wonder what gold's up to. Yeah, similar to silver, closing at the lows. Not a great deal to say. That looks a lot worse than silver. You can see here on the Thursday, the wick got bought back up. We actually got a positive close, and they've completely gone back in. They've completely reinvaded that territory where people were buying back up all the way to a positive close. They've just turned it around and just fucked them. They've really fucked them. So maybe we need to come down. Maybe we need to take out this wick. Maybe we need to take out this wick. Maybe we test this top, which also runs through the middle of this whole gimmick here, this whole area here. Yeah. You see that? Maybe we need to come down to there, or at least take out these wicks or something, unless we reverse, immediately on the Monday. Silver did look better on lower time frames, and there was a little bit of that in gold looking at this, but I mean, this little candle here gets you all optimistic. You see the divergence, you go, oh, up, up and away, here we go. But again, looking at that longer view, maybe we need to go down more. Yeah. Gold looks worse than silver. But again, on like a super low time frame, I mean, you see that candle, you immediately just think, buy it. You know, look at this candle. Oh, we're breaking out. Look at this. Oh, look at this positive divergence. You know, we got it. I keep clicking and Pro Real Time's not drawing what I fucking want. You know, look at it. Even on the ease of movement, look at that on the 5 minute. But solidly negative readings. Solid. Total change from this period here. It was the Friday, 11th of June, and 8 in the morning that it all changed. Let's find where that was. This is where we changed into a permanent orange kind of territory. Yeah. Yep, we picked the high. And look, on the 5 minute, where was that? Yeah, it was right in this zone here, this sort of bearish reversal zone. You got caught short here. They made one more high, but even then, you get the negative divergence here on the histogram of these movement, even on the 5 minute. But then look at this move down. Vroomf. Vroomf. Sheer. We're just profit taking. This is just profit taking. People immediately come in. Profit taking. People immediately come in. Down, down. Chop, 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 chop. More profit taking. Straight down. Into the point of origin. Oh dear, what did I do? Accidentally moved my fib. Well, this is a tricky area here, because on candle bodies you go, well, that's the point of origin. You know, this is the point of origin of this move here. But then on wicks, it's like, well, actually, like, it's too big. I mean, you're going to buy this? I mean, you could, I suppose. It's only a few points on gold on the 5 minute. We are on the 5 minute after all. You know, maybe this counts as the point of origin. Maybe this is where you're throwing buy orders deeper and deeper. Well, I don't know. So, purely on the basis of macro bias and the fact that silver's holding up relative to some of these other anti-dollar assets, I'm going to keep with it. We'll see if the virtue of patience pays off, or whether it's a virtue that in fact doesn't pay off and punches you and gives you a black eye. We'll see. Anyway, let's